The latest unemployment figures are likely to keep interest rates on hold, at least for now. You'll hear in this week's Property Insider Chat, Dr. Andrew Wilson and I discussing how unemployment only ticked up 0.1% on a sort of a rounding error, really. And in many ways, we're creating more than enough jobs for all the participants coming into our jobs market, with participation rates being high as well. So what does the unemployment figures mean for our housing markets, for the economy? That's what we discuss in this week's Property Insider Chat. And we also talk about the regional property markets around Australia, how they're performing, and the latest auction results. If you want to keep up to date with what's happening in real estate and the economy, please subscribe to this YouTube channel and click the little bell icon so we can let you know what's happening each time a new show comes out. New unemployment figures paint an uncertain picture for borrowers, business people and investors. But one key question continues to confound many commentators. Why isn't our jobless rate higher? For 5 years before the pandemic, national unemployment rate ranged from between about 5 to 6%. It actually spiked to 7.5% in mid-2020. But since 2022, when interest rates started to increase, unemployment's been between 3.5% and 4.1%. Now, according to the Australian Bureau of Statistics, June jobless rate was up just 0.1% from 4% to 4.1% in May. So why has our unemployment remained relatively low despite business collapses, rising mortgage stress, more people coming to Australia, and an economy that's been shrinking on a person-per-person basis? What do the latest figures also mean for interest rates? These are some of the questions I want to ask Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, in this week's Property Insider Chat. Hi, Andrew.
Yes, good morning, Michael. And, even though the unemployment rate did tick up marginally, it was really only, a fraction of a percent higher. And so it was rounded upwards, and that's what gave us the 4.1 compared to the 4. But you're absolutely right. I mean, it's still a very, very strong economy. And, to be still floating around 4%, given the hundreds of thousands of new entrants we've had into the labour market over the past year or so is quite remarkable. And also, as you said, given we've had 2 years of higher interest rates now, all the chat was from the pundits, I won't call them experts, but saying that there was a lagged effect with interest rate activity. Well, what is it, 3 years of a lagged effect? That's just nonsensical. But the economy keeps on keeping on. And of course, in terms of the outlook for interest rates, that's, not really looking at anything else other than we've been discussing here, and that's maybe a steady outlook.
Well, what does this mean for interest rates? Because we've got some more figures coming in later this month, and then there's going to be the Reserve Bank meeting in August.
Yes, well, let's look at this. There's really a nothing sort of result in terms of either higher rates or lower rates. There's no need for lower rates because of concerns for the economy. That would be driving it with these figures, because the economy is still quite strong. And it's, even though it's weakened over the past year from what were those really crazy low COVID recovery rates in the mid threes, in fact, some capitals were in the low threes. There's really no sense there other than we need to dampen demand with higher rates. So I think the labour market is just holding nicely, to be quite honest. And I wouldn't suggest that the Reserve Bank would be concerned one way or the other. They'd be quite happy that they've, even with these rate increases that we've had over the past couple of years, that the economy is still performing very solidly.
Well, how does it compare in various states around Australia, Andrew?
Well, if we look at the headline results first, Michael, we can see that the June jobless number, seasonally adjusted, was up to 4.1%, and that followed the previous month's 4%. And it was only up marginally, so it was just a question of, up and down slightly, and the rounding took it above 4% to 4.1. Another big increase in the actual number of people working, Michael, up by 50,000 over the month. And that followed a 40,000 rise over May. And we also had a big rise over April. So we're still creating lots and lots of jobs. And of course, that reflects, as you mentioned, the impact of high levels of migration, or a return to high levels of migration. So that's sort of working, but it's not pushing down the unemployment rate. The unemployment numbers were higher, however, up by 10,000, but that followed a 9,000 fall over the previous month. So I sort of cancelled it out the last 2 months in terms of the number of people who are unemployed. But the participation rate is the magic number here, Michael. So that now rose to 66.9%, which is just below the all-time record back in November 22 of 67%. So what that means is that we've still got the highest proportion of those in or active or anticipating to participate in the workforce on record, and yet we've still got this low unemployment rate. So we're not having any problems absorbing all these entrants into the jobs market, with that still unemployment rate at around about 4%. Western Australia and New South Wales are still the lowest states for jobless, but Western Australia has certainly cleared out in terms of being the top performer. Western Australia has an unemployment rate of 3.7%, with New South Wales and now South Australia also at 3.9%, each of them at 3.9%. Victoria is the outlier with an unemployment rate of 4.5%. But I thought this week, Michael, we might just have a look at some more data, a bit more in-depth data that reflects what's happening on the state level, and it actually reflects a stronger a stronger Victoria than that headline unemployment rate would suggest, particularly compared to the other states. So let's have a look at some other data. And firstly, we'll look at jobs growth. And this is the annual rate of jobs growth, and Western Australia just cleared out there 4.9%. This is a remarkably strong number, Michael. To have that sort of an increase in the number of people employed over a year is quite remarkable, 4.9%. And yet New South Wales, which has, with Western Australia amongst the lowest unemployment rates, has only had a 2% increase in its jobs growth over the past year. And Victoria, which has the higher unemployment rate, has had 3.1% growth rate. And no surprise, there's strong growth rate over the past year in Queensland, because we know that that's been the beneficiary of a very strong surge in migration, interstate migration. So once we get a little bit deeper, it's not quite as bad in Victoria as those headline unemployment numbers suggest. They're not quite as good in some of the stronger states, particularly in New South Wales. And this really validates it, Michael. When we look at the participation rate amongst the states, no surprise there, Western Australia leading the pack again, with the highest participation rate. And of course, this measures the proportion of the population that's in the workforce. They don't necessarily have to have a job, but they can be looking for a job. But that's a high proportion. But when we look at New South Wales versus Victoria, and even though it's 1.8%, that's actually a significant difference, Michael. That New South Wales actually doesn't have the higher or the participation rate that Victoria has. So Victoria has a higher participation of its employees, and that actually can tend to make the unemployment data look a little better than it really is when you have a lower participation rate, because you're not absorbing, or you don't have in the workforce, the proportion of the population that others do. So Victoria actually has, second to Western Australia, the highest participation rate of all the major states there. So again, I think that is positive news for the Victorian economy, where certainly there's been a lot of talk about how it's struggled, etc. But in terms of the labour market, it's certainly not even with the highest unemployment rate, it still shows some very positive signs, I think, for the Victorian economy.
Definitely. And that's good news for an economy that has been challenged a little bit. So, Andrew, putting all that together, the data keeps showing us that economy is doing much better than many would suggest. Now, again, we're not downplaying the challenge that some people are having with rising cost of living, rising mortgage costs, rising rents. But overall, I guess this suggests that there's no way interest rates are going to fall anytime soon either, with strong jobs growth and low unemployment levels.
Yes, I think it's a neutral result for the Reserve Bank, Michael. I think it's
Yeah.
neither too hot or too cold, if you know what I mean. Goldilocks result, but we're awaiting now the inflation data, which will come
Inflation
out
data
next
will be the
week.
thing that they decide on, won't it? Now,
That's right.
every month we talk about the My Housing Market's auction results, the house price results, and the rental results. But we talk mainly about the major capital cities.
Yes.
But obviously, there's 15,000 or so suburbs around Australia and a lot of very large regional markets. I know recently you've been looking into this in a bit more detail. So, how are our regional?
Yes, I think it's important we look at what's happening in the regions. Of course, through COVID, Michael, there was a lot of discussion that COVID would drive more into the regional markets. We've sort of seen that happen, but it's probably not been an absolute direct, sea change, green change type of movement. It's been more a reflection of the, particularly into southeast Queensland, that sort of interstate change because of the perceived negatives of COVID. And maybe a lot of interstaters, southerners, particularly New South Wales, Victoria, Melbourne, and Sydney, have rediscovered the lure of the sunshine of southeast Queensland. But I do think it's important for us to look at what's been happening in the major regional markets, and these are major local government areas. So these are because obviously when we get smaller local government areas, the data tends to be quite volatile because we don't have as many sales coming through. So what we do here is, in terms of informing the public, is look at the major local government areas for each of the states. And I think it's really interesting to see how, and we've discussed this before, Michael, how the regional markets actually follow what's happening in the local capital city market. And we can see that quite clearly here. Firstly, let's look at the top New South Wales local government areas. And of course, being the most populous state, these are some of these local government areas are quite populous and have a lot of activity in terms of prices or sales data. But no surprise, the top performer in New South Wales over the year to June, so it's over the financial year, has been the Tweed, which of course borders onto the Gold Coast, which has been a boom market, we know, up by 18.6% over the year, with a median well over $1 million. And now Ballina, which has been dragging the chain a little bit, has sort of caught that southern Queensland energy, and it's now up by 13.5% over the past year. So those, I guess, northern New South Wales markets have certainly broken clear in terms of comparing to the other New South Wales LGAs. But no surprise at Wollongong, which is really a suburb, if I could say that, Michael, a suburb of Sydney, is also up strongly behind those northern New South Wales regions, up by 8.8%. Shellharbour, 6.7%. Never get the sort of the value markets of Wagga Wagga, up by 6, which has a median well below the other, 610,000, but up by 6.6%. But it was only Coffs Harbour, Michael, that recorded a negative growth of those major regions over the past year. All the rest were up. And I think it's a very similar result to what we've seen for Sydney. And these are houses, of course, for Sydney house price growth over the past year, certainly well into the 5 to 10% realm. And if we average that out, that's what we get. So, but the key takeaways there are I guess the contribution that demand is making to northern New South Wales, reflecting just how strong that southern Queensland, particularly that Gold Coast market, has been. Now, by contrast, when we look at Victoria, not quite the same sort of energy, although starting to improve a little bit, Victoria, the major local government areas there from the last results that we had. Shepparton, again, no surprise there that moves upwards because it is one of the lowest value markets, or highest value, I guess we could say, because of its median, just 438,000. But up by 6.8% over the year. The Surf Coast, which has been part of that sort of negative prestige market that Melbourne's been suffering from, has started to pick up. I'm not surprised there. That's a very popular area. very low supply and typically high demand. We're now starting to see prices rise again on the Surf Coast. Perhaps value buyers are moving in there. Very popular regional area, the Surf Coast, up by 3.6%. And the Macedon Ranges is a bit similar to the Surf Coast, Michael, but more of a green change environment, not that far out of Melbourne. And a lot of empty nesters start looking for that green change into the north of Melbourne. And the Macedon Range is up by 2.1% after being a little bit softer over recent months. But the other markets are lower. And again, it just reflects that sort of lack of drive coming out of the Melbourne market. But there are some positives there from markets, value markets, and high demand regional markets, Surf Coast and Macedon Ranges. And I expect that to continue because I still think they offer, well, I think Melbourne generally and Victoria LGAs are still offering good value for buyers going forward. If we sort of move to the Queensland regional markets, gee, look at this, Michael, in terms of
Yes.
this is just quite incredible. We don't have any growth rates under 10% for the major Queensland LGAs, and this just reflects what a boom market that Queensland market is. And now we're even seeing some that have been clear outliers, such as Townsville, booming. Townsville's been a market that's struggled for a number of years, and it's now picking up. But of course, part of that is that value, that the value equation with a low median, but now up by 31.3% over the past year, Michael. Gold Coast still roaring along, 21.4%. And some very strong results. Rockhampton up 18%, Bundaberg 18%, and markets that are adjacent to Brisbane very strong. Toowoomba 17.5%, and the Sunshine Coast 13.7%. So very strong results across the board, and once again reinforcing the energy, how it dissipates outside the capital city into those regional markets. And it's quite interesting that when we do the averages, it sort of works out at what the capital cities are doing in terms of prices growth. But Tasmania has been, as we know, as usual, a bit of a contrarian. I guess that Hobart market is a clear contrarian. When everybody else is growing, it seems to track backwards, and when everybody else is tracking backwards, it's growing. But certainly all the major LGAs in Tasmania have moved backwards over the past year, and that reflects what's been quite a soft Hobart market over the past year. But of course, this does follow what was a very strong period of growth all the way up to and including the COVID period in Tasmania and Hobart. And Darwin, or the Northern Territory, which tends to be a little seasonal because of the wet and dry there. The major LGAs there, Palmerston and Darwin, have tracked backwards. Palmerston quite steady, but this can change from period to period because it is a smaller market, fewer observations, and it is certainly exposed to what are significant seasonal wet and dry, if we could call it that, the wet and the dry season, very much the dry season at the moment. And that tends to have buyer activity bounce around according to what's happening with the weather. So that's our regional breakdown. I think it's quite interesting going forward to see how those regions are tracking, and also to identify where the stronger regions are, and also the relationship between the regions and what happens in the capital cities.
Well, there's clearly a hybrid work model that now remains after COVID. And I think the regional markets, the big regional areas close to the capital cities within an hour or two's drive away, are going to continue seeing people move out, partly because of affordability, even though those markets don't have such an affordability gap anymore, do they, Andrew?
Well, they don't, and that's part of the story. But I don't think we're going to see the wholesale shift of populations that were predicted, but they were just more or less cheap headlines. But certainly, the markets that are very strong are attracting buyers, as more or less as away from those capital city areas, not just value, but also lifestyle as well.
Yeah.
Sort of drives that. And we do have the work from home environment that's just very well established. But I think the reason why we don't have the real shift in demand outside, or significant shift in demand outside the capital cities, is because we still have a lack of infrastructure by comparison with what we can offer in the major capitals. And it's not just that; it's also friends and family and recreation and things like that.
Definitely. I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, each week we discuss the auction results to get
Yes.
an indication of what's happening on a market and in-time basis rather than just looking at historical data. Clearly, there was a couple of weeks where things were quieter with winter and school holidays.
Yeah.
The school holidays have finally ended. So what happened to our auction results, Andrew?
Yes, Michael, it's been up and down, and there is a big disparity between the states in terms of the school holiday agendas through winter. Some go pretty early, some go quite late. So we've sort of been moving around accounting for that. And of course, it is the winter season, where buyers tend to have either done their job, buyers and sellers, through autumn, which is our other major selling season, and we now await the spring selling season. And a lot of those decisions that are made in regard to the generation of the spring selling season are made now during that winter period. People on a break, and they're starting to think about a Christmas or a campaign that will bring them up to Christmas, to the end of the year, and to either buy or sell. And that's how we sort of generate. It's really got not anything essentially to do with the weather, but it is about the holiday period and the fact that we have the two seasons that are focused around decisions made at the beginning of the year and decisions that are focused on an outcome for the end of the year. But we've finally come to the end, as you said, of school holidays. New South Wales and the ACT and Adelaide all finished last week. So we'll be back to sort of normal, but normal is in context of the winter market, which is that typically slower market. So we had a couple of interesting results. It's still not really, even though there are fewer buyers, Michael, as we would expect, it still doesn't really feel like a winter market because we've still got plenty of sellers that are active in the market, not in relation to what we saw in autumn, but in relation to last winter. We're still ahead of where we were a year ago in the market. And I think that's, again, reinforcing that our markets have still got plenty of zip in them, despite the mid-year sort of energy, which we would expect. And of course it will have a dampening effect on overall activity until we start to revive in a couple of weeks. But when we look at the results, Sydney auction numbers with school holidays now past, up, not completely past last week, but certainly higher than the week before, which was the middle of the school holiday period. Auctions, 621 auctions, which was higher than the weekend before, 581, and still higher than the same weekend last year, Michael. So still tracking higher. And a clearance rate still above 70%. So plenty of buyer activity there. And 70% is still a seller's result, clearly. Melbourne market had a big rise. Of course, it's now beyond school holidays. So it's a normalised market. 785 auctions, which was a big jump from the weekend before. And again, well ahead, Michael, a big increase compared to the same time last year. But the Melbourne clearance rate fell away. We've sort of been expecting that to some degree. It's held up quite well over the past month, the Melbourne clearance rate. But with those extra 200 auctions, and of course we know this time of the year there are fewer prestige properties in the market compared to mid-price and budget price range, but still a weaker clearance rate certainly there in Melbourne. But as I said, winter result perhaps, and also affected by what was a very strong increase in the number of listings. Brisbane down a little bit in terms of auction numbers, but holding around about at that Brisbane rate, which we expect around 50%. But higher than a year before, but the clearance rate, of course, well below, because Brisbane was in the middle of an unprecedented boom in its housing markets a year ago. and we'd never seen clearance rates above 80% in Brisbane, which just shows you how strong that market is when we're used to, a robust Brisbane market producing 50% clearance rates, and yet we got an 80% a year ago. And that's, of course, what's driven what we saw with the regional markets, all that expansion in prices, it's been that, remarkably strong market. Adelaide had a very interesting result, Michael. Big jump in the listing numbers, but this is the lowest clearance rate we've seen in Adelaide for a long, long time. So I think it's a little bit of an aberration. Given we'll look at next week's results to clarify that, but we've been used to Adelaide producing 80% plus clearance rates, or close to 80%, but 57.1 is very, very low. So I'm not quite sure, what happened there, but we'll certainly see next week's results, or we'll look at that with some interest in terms of Adelaide. And Canberra just picking up again, but again, Canberra's being affected by school holidays, which have finished now, but we'll get the full market back next week. Clearance rate of Canberra, 53.1%. And following a number of weekends where Canberra was producing very strong results, over 60%, it's been a little bit softer over the last couple of weekends. Maybe that's the school holiday result coming through. So when we look at the trends, Sydney holding quite strongly, and so far this month ahead of where it was in July and averaging above 70. The Melbourne market, just starting to float backwards a little bit following that lower result at the weekend, but still holding overall in July above 60%. But we are now moving into that winter market in Melbourne, where we certainly do see a lower proportion of higher priced properties and less buyer activity as a result. And Adelaide really dropped down with that low result on Saturday, a clearance rate of 70%, but that's one of the lowest we've seen for some time in Adelaide, that 50% clearance rate. In Canberra, with signs of a revival, just sort of petering out, and I think that's more to do with school holidays. If you're looking for those auction results every Saturday, as Michael said, we like to produce results in real time so we can inform buyers and sellers about what's happening in the market now. And of course, those auction results are very good forward indicators of market energy in real time. So Saturday at 6:30 p.m, around about 6:30, we get the full we get the snapshot results on the day on my LinkedIn account, Doc Andrew Wilson at LinkedIn, and Michael produces the full national report on Sundays, which is also available on my LinkedIn account, which shows you the regional results for Melbourne and Sydney, as well as the top 10 sales on the day for all the capitals. And just reiterating what a strong season it has been, we're still seeing very high numbers of listings. It is still a market that's being embraced by sellers, regardless of all the distractions and the typically subdued winter period. But listing numbers in Sydney, even though the trend's now starting to fall away as those listing numbers get closer to where they were a year ago, and we are into the second half of the year now, Michael, we're still 31% higher over the year to date versus the same period last year in Sydney, 23% higher in Melbourne, 16% higher in Brisbane, 12% higher in Adelaide, and 3% higher in Canberra. So we're seeing more sales activity, in fact, record sales activity for the first half of the year, and still seeing prices growth, Michael. So not sure how those that have been relying on the overt supply and demand law to predict lower prices because of higher listings sort of say about that, with record listings and still higher prices going forward. And that's our QR code for the report, the national report. If you've missed out on getting it from Michael, there's an update there, or the QR code, which will take you to that report.
I think the property bears have been hibernating over winter, Andrew. We don't hear much from them anymore. Their stories have actually fallen by the wayside, because I think what you've just shown is the depth that's happening in the
Yes.
market. There's, for every auction, there's a number of bidders, some missing out. They next weekend even more keen to get something. Similarly, sellers say, hey, that property down the road sold for that price. I'm not going to sell mine for any less now. So it's a self-fulfilling prophecy. But again, it just shows that people aspire to own their own home. Investors are still getting into the market. So we'll be back each week to report what's happening.
Yeah, and lots of news coming up, Michael. We have the inflation data coming up, and of course, we'll have the July house price report also coming through next week.
Fantastic. Look forward to that, Andrew.